Did the Fed start another stock market correction? I'll answer that question, plus do my regular weekly market analysis, do some market scanning in search of opportunities, look at the trade of the week on SNAP. That's all ahead in this week's Market Minutes. All right, so did the Fed start a market correction? On Wednesday, the market went down after Fed Chair Powell said that low inflation may be transitory. And what that means is that it may not be an environment where the Fed doesn't have to combat inflation by raising interest rates. And I think the market was really hoping that if anything, we'd see a drop in interest rates in the future. And that spooked investors a little bit. And we had some selling pressure on Wednesday, and that carried over into Thursday. And so the question then is did the Fed start a correction? Are we in for more weakness ahead? Well, the weakness only broke the most minor of upward trend lines, and I'll show you this in a moment. And given the gains that we've had since late December, given that we've rallied into resistance at the all-time highs, I think it's pretty reasonable that we would see some profit taking. And I don't really think that the Fed's comments about inflation are going to be a big factor for the market. I think the market is more interested in China-US trade and what comes out of that. But most importantly, until the longer-term upward trends are broken, we should remain bullish. So let's take a look at those trends. And here is the 30-day, 30-minute chart. And I've drawn the trend line on here. And here's where Powell was speaking, and that caused the market to sell off into the close on Wednesday. And then that carried over into Thursday, breaking that upward trend line, and we ended up closing below it. However, on Friday, a strong jobs number caused the market to gap up and right back into this upward sloping channel. And so my expectation now is that we are going to build an ascending triangle pattern here as it basically the market trends underneath resistance. So resistance was about 294. We actually went through that a little bit before Fed Chair Powell spoke. And then we sold off, and that is so typical to see a market rally into resistance, try to break out, fail, come back, and ultimately go sideways for a while as the market consolidates, and by consolidate I mean go sideways underneath resistance. Now looking at the longer term chart, this is the daily chart, you can see that we remain in this nice upward sloping channel. We had a couple days of weakness there, but we're still well above that upward trend line, and so there really is no reason to be concerned for a correction yet. Until that trend line is broken, I would stay bullish on the market. What do you want to watch for? Well, let's look back here when we had this upward trend line and that upward sloping channel, and then ultimately we had the breakdown of that upward channel, and that's what telegraphed the big correction that we had at the end of 2018. Well, we don't have that breakdown yet, and therefore I think it's important to remain bullish on stocks, although expect that we're going to stall a little bit. So looking at the US markets, we're going to look at the S&P charts again just to revisit this. I think we're going to see the market build some kind of pattern sideways here. We may pull back a little bit, but ultimately I think we're going to build a base just underneath resistance, and hopefully the market can then break out through that. I think it's real important what happens with China-US trade. That'll motivate the market to break out or not if it fails. All right, on the longer term chart, there you can see that longer term resistance should be a little lower. And we actually broke through that slightly on this past week, but we didn't hold above it, and we're still sort of just trending below it. You could argue that we're just slightly above. I think we're just going to go sideways here for a little while and build a base, and then ultimately try to break out through it. Moving along, this is one of the charts that I find most interesting. The small cap stocks have really lagged in the last couple of months and been a pretty boring place to trade. But look what happened on Friday. We had a breakout from that ascending triangle pattern, and I think that sets up for a rally into resistance. And so this candle that broke out through that resistance level, it's an important signal that we may see some action coming back to those lower price stocks which have been pretty sleepy lately. All right, moving on to the Canadian markets. Here is the chart of the TSX, and the TSX has had a great run. There's its upward trend line on the short-term chart. It built a falling top, it broke down from the falling top, and so I think we're in a little bit of a pullback mode here short-term, and I expect that we're going to sort of drift lower, perhaps even accelerate lower, but given the gains that the market has made, year to date, that's not unreasonable. Look at those considerable gains, much like the S&P 500, but here we actually broke through resistance, and I think we're now due for some profit taking, a little bit of a pullback, but that doesn't mean an end to the bull run. It just means a little bit of a base building as some investors take profits. And until we break some trend lines, I'm not too concerned. We'll watch for it though. We always have to watch for those breaks of trend lines. The TSX microcap stocks, which make up the TSX venture market, they are showing some concerning signs here. We've got some falling tops that have been building. If you've been playing the cannabis names, you know that the cannabis sector has kind of quieted down, not getting a lot of action, and we're seeing some selling pressure in the group. And I think this market is more likely to go lower than higher near term. And so I would be cautious with some of those strong cannabis stocks that are now starting to drift. I think that the story has gotten a little stale, and investors taking some money off of the table near term. On to currencies. US dollar has been a big story because it's been very strong since the start of 2018, or at least the spring of 2018. It recently broke out through resistance. It pulled back a little bit last week, but it's still in that bullish trend, and therefore I remain bullish of the US dollar. On to the Canadian dollar. Well, of course, we've talked about this pattern many times, just consistently falling tops on that market. And until we can break the trend line, and what you want to watch for is a breakout through the trend line where I've made that arrow there, it's got some work to do before that'll happen. And until it does, I wouldn't be too optimistic about the Canadian dollar. Now, what is encouraging is right now there is potentially a rising bottom. And so if we did break the trend line in the next few weeks, that would be a positive because it would have done so from a rising bottom, which is a typical turnaround pattern. But it hasn't done it yet, and therefore remain bearish of the Canadian dollar. On to interest rates. Always an inverse chart here. This is the bond market chart. If this chart is going up, interest rates are going down. And there is our resistance level, which was broken. We've pulled back, and now we've broken that pullback. It looks to me like the bond market more likely to go higher than lower, which means interest rates more likely to go lower than higher. Commodities. Well, gold has been in a bit of a pullback mode once it broke that upward trend line from a falling top. And I think that gold is most likely to continue moving downward until it can break the pullback. I think it's best to be bearish on gold. Oil has had a considerable run higher since late last year. We see this sort of bounce back from the extreme weakness that we saw there. 2 weeks ago, it made what we call a bursting bubble candle, where it hit new highs and closed below its open. And that followed through into a little bit more weakness this week. So I think there's a little bit of caution deserved in oil right now. The upward trend is still in place. It's definitely being flirted with as to whether we're breaking that upward trend line. I think there's some caution warranted there. But let's see if it bounces this week and maintains the trend. I think most likely oil is going to sort of bounce sideways here, but I'm a little bit concerned if that upward trend line is broken. And let me draw this a little bit more accurately. We're right at the trend line right now, and so potentially we could break down, in which case we got to get defensive with oil stocks. But for now, this is kind of a healthy pullback, something that's long overdue because the bounce back in oil has been pretty considerable. And finally, the fear chart. Well, the VXXB changed back to the VXX. Barclays, which manages that ETN, switched the symbol back to VXX. For a while there, it was VXXB, which is why our stock scores are screwed up. We have to merge the files. We'll do that as soon as we can. But here is the basic important thing about this chart is that there's no fear. We've had these little spikes in fear. We even had a little bit of one on Wednesday, but it hasn't lasted. And until we really start to see some tall moves to the upside on the fear index, investors just aren't too concerned about a correction. So the outlook then, neutral on both time frames for US stocks. Just feels like we're going to go sideways a little bit underneath resistance or at resistance. Canadian stocks, neutral long-term, bearish short-term. We are in a pullback mode after some strong gains, and I just think that could last a week or two more. Gold, bearish on both time frames. I still think that gold is best avoided until the downward trend can be broken. Oil, neutral long-term, bearish short-term. We are getting some pullback, some profit taking in oil. We haven't really broken the upward trend line yet, but it feels like we're probably going to head sideways or could still even go lower in the near term. So a little bit of caution with oil in the very short term. So US stocks have stalled at resistance and they're now seeing some profit taking, but the upward trend still remains intact. Canadian stocks are also seeing some profit taking and are likely headed sideways or lower near term. Gold remains in a downward trend. Oil is showing signs of a short-term pullback, and fear remains low. All right, so let's do some market scanning. We're going to jump over to the Stock Scores website. And this week I thought I would run the weekly version of the Stock Scores Simple strategy. So we go into Stock Scores Simple Weekly Canada, click on that, run the market scan. It found for us 20 stocks, and we're now going to look at these charts one at a time. I'm going to do them in the slideshow view so that we can get a nice big version. And the first chart looks quite promising. This stock has broken its downward trend line. It has built a rising bottom and broken from the rising bottom. This is Burcon NutraScience. Not sure what they do, don't really care. What I like is the chart has some volume coming into it, some positive price action. I would give this a 7 out of 10. Moving along, this stock, the party has started already, and if you're not in it, you're not in the party. You want to not chase markets higher. This one made its breakout in 2018 on the weekly time frame, and so it remains a hold, but by no means is it a buy right now. This stock, Resverlogics T.RVX, made its breakout from a little pullback a number of weeks ago. That to me was the best entry point in the last number of months, and now you're getting the reward for having taken the risk back here. And you don't want to chase the reward. You want to be the risk taker buying when the market first starts to show strength. So we'll move through these a little quicker. Don't really like that one. Extendicare, I do like this. So again, we love to see these breaks of downward trend lines from rising bottoms. This actually broke 2 weeks ago, but it hasn't gone anywhere yet. So I still think it's a valid stock to consider. It's got a pretty decent yield. I don't recall exactly what it is, but I think it's around 5%. So decent yield, breaking a downward trend line from a rising bottom. Extendicare, T.exe, is a 7 out of 10. Air Transat, some rumors that they might get bought out, and that caused the stock to make a big jump. Problem is, on a reward for risk basis, it's just not a trade I would take. Yes, it could go up to 11, but the downside is down to 5, and I don't think that the risk-reward relationship is awesome. Summit Industrial, too late. The party started a long time ago, back in late or early 2018, the last important breakout there. So it's a good hold, but I would not buy it here. Just continue to zip through these a little faster. I'm going to pause when I see something that I like. Notice that I don't take a long time to look at these charts, and after you've practiced reading charts for a while, it really doesn't take very long. This is a cup and handle pattern. We've had a little sideways action for the last 6 or 8 weeks on OTEX, and it's broken through that. It's not a great chart because it's well into its upward trend already, but it does look like it wants to go higher. I'd give this a 6 out of 10. Descartes has been moving up too much already. Strong stock, good hold, would not buy here. And now we're going to get into some of these index ETFs on the S&P 500 and the NASDAQ. We're seeing these ETFs coming up. TRI, too late. You know, if you think about breaks of downward trend lines, which is one of the things I like to trade, there was a break. Trying to get my drawing tool to work properly here. There was a break way back there, and that was the initial sign of strength. And then we had what's called a flag break right here. And now you're getting the reward for having taken the risk there or taking the risk there, but you don't want to chase after upward trends like that. This one, another stock well into its upward trend, let it go, nothing to see there. And this stock also well into its upward trend and really getting a little overbought. So still, there was a few good stocks in that list there. Let's now move on to the trade of the week. And this week I show a trade that came up on Friday. This was on Snap or Snapchat, SNAP. Really nice action candle from low volatility, which is what I love to see. This was a stock that I highlighted in the Active Live service. You can go to the Stock Scores website under Trader Training or maybe Trade Analysis for more information on Active Live. But it's essentially a service where you watch my trading screen through the day, and this was one of the stocks that we highlighted. To take $100 of risk on this trade required 1,420 shares, which was $16,000 in change in capital. But using 3-to-1 margin, you would be looking at a position of $5,385. By the end of the day, of course, this being a day trade, by the end of the day, it had earned a 6.1 RR, so about a $600 gain, and that's an 11.1% return on the capital required for a one-day hold. And there was a number of really good trades on Friday. Friday was actually the best trading day of the week, and the overall total RR was well over 60 just for the trades that triggered in the opening half an hour. So hopefully we'll get more of that. Again, because we're seeing that strength start to come back to those smaller cap names with the Russell 2000 breaking out of a trading range, it could be a good time for the smaller cap stocks to start to show some life. Well, that has been the Stock Scores Market Minutes for May 6, 2018. Please like the video if you enjoyed it, leave a comment, subscribe to the channel, and most importantly, trade well.